In this video, I'm going to share with you a Goldbach time and price secret, which uses institutional trading levels, mathematics, and 3 years worth of statistics to help you produce a high probability trading strategy for index futures. The institutional time and price levels that we are interested in is something called the initial balance. So every weekday between 9:30 a.m. and 10:30 a.m., institutional price levels are set. And you can then use these for a breakout strategy. Now, looking at the statistics, this is Edgeful, and the report that you will want to deep dive into is a futures report called the Initial Balance Breakout. Now, you want to use 3 years worth of data for the New York session, and I'm currently looking at NQ. So what this report tells you is once the initial balance range is created between 9:30 and 10:30 a.m., what is the probability that we have a breakout and the other side of the range is not touched again? So using 3 years worth of data, we know that 75% of the time, when you have a breakout, either bullish or bearish, the other side of the range will not be touched. Now, why is this so powerful? Because once we have a breakout, we have our bias. And in this case, it's 75% accurate. Now, how do we make this into a more profitable trading strategy? We combine it with the mathematics of Goldbach. Now, if you aren't familiar with Goldbach, there's a link to an introduction to Goldbach in the top right-hand corner of this video. So step 1, we are looking for a breakout of the initial balance range. Now, this is yesterday's price action, and you'll see that my last few examples, I've always used yesterday's price action. So there's no cherry picking and the data is fresh and you will have access to these levels. So playing it through from 10:30 a.m., we are waiting for the initial balance range to be broken. That will give us our bias. So let's wait for this. Okay, we now have our breakout. This tells us that our bias is now bearish. Now, what we are interested in is what is the correct dealing range based off of the mathematics of Goldbach. Now, if you aren't familiar with Goldbach, there's a link to the Goldbach introduction video in the top right-hand corner. The algorithm that I'm going to teach you today is called Algo 2. And what Algo 2 essentially says is once you have a dealing range and price has been accepted into that dealing range, this macro can run where price goes from the high of the dealing range, it retraces to a point X, normally the breaker. We then retrace to the fair value gap GB level, and then price moves to the opposing order block. Okay, this is the trade that we're going to take. So what does this Goldbach dealing range tell you? It tells you that the low of the dealing range is here, the high is here, and the PD arrays will form here. From the rejection block, the order block, the fair value gap will form here, the liquidity void, and so forth. Now for an Algo 2, we are looking for an entry at the fair value GB level. We can have our stop at the high of the dealing range as determined by mathematics, and we can TP either at the opening of the order block level or at consequent encroachment. Okay, so let's run this through again. We have the initial balance range defined by 9:30 a.m. and 10:30 a.m. We look for a breakout, which gives us our bias, and then we are using Goldbach to trade one of the macros that runs. In this case, it's an Algo 2. So this is the trade that you would have taken yesterday, playing the candles through. We are touched into the trade. Okay, immediate rejection from that fair value level. We've already made it to EQ, and we're looking to TP at the consequent encroachment of the bullish order block. There we go. Now let's have a look at these exact levels. You can put in some non-GB levels and some CE levels. So let's find exactly where the consequent encroachment was. There we go. That's pretty precise. Now you could have measured it exactly, but that's how precise Goldbach is. Now, this works across all asset types, but it's essential that you run the statistics first. to ensure that the initial balance single break percentage is within your favor. If you would like free access to Edgeful, there's a link to a 7-day trial in the description to this video. And if you would like to learn how I trade time and price using my golden bullet strategy, which works for Forex, index futures, energies, metals, and crypto, there's a link to my mentorship below.